It's late in the week, but we still got some earnings and a deep dive into a software company whose shares are rallying after the report. Canadian-based OpenText Chief Financial Officer joins us, Madhu Ranganathan, here with us this afternoon. Madhu, thank you for joining us here on the Schwab Network. Appreciate you jumping on at the end of the week. Post earnings, introduce yourself and tell us what your company does, because when it comes to some of the cloud stuff, my mind gets a little jumbled sometimes.
For sure. And Oliver, thank you for having OpenText. And we are a leader in information management, and we have many pillars that range from content management, experience, business network, and cybersecurity. And as you rightly pointed out, we just announced results yesterday, and we had a very positive quarter. It's our first quarter, and the team delivered excellent results. It's also our first quarter of a full year with Micro Focus. It's $1.43 billion in revenue, double-digit cloud revenue growth, organic growth in cloud, and annual recurring revenue, ARR, is an important measure for us, and 34.7% in adjusted EBITDA margin.
Your revenue growth has been accelerating over the last 3 years, and it doesn't look like to me that was like a COVID-specific like pull forward of demand. You had high single-digit growth in 2020, 2021, but the last couple years, tell me where that's coming from and if you can sustain that level. I mean, we're talking like 20, 40% in the last quarter. Analysts say you're going to be able to hold on to at least like 30% growth rate.
Yeah, that's right. So a couple things. It's certainly not entirely COVID-driven. We have been investing, heavily in R&D. If you look back a few years, R&D as a percentage of revenue was 11%. It's grown to 13%, and now for this fiscal year, June is our year end, we are planning to invest 14 to 16%. And as you know, product innovation leads growth, and cloud is a very key driver for our growth. We are seeing growth in all of our cloud products, and we can certainly talk about SaaS and AI as well. So we are looking, can this sustain is an important question. If you look at our fiscal 26 aspirations, we're looking to grow 15% plus in cloud bookings, and we're looking to grow 7 to 9% in cloud revenue growth. So certainly our go-to-market execution, R&D investment, and with all of the market, hype on AI, where we're very well positioned, we do look to sustain the growth.
Okay. And the acquisition of Micro Focus contributing to some of that growth. What about synergies, the realization of that deal? Are there cost cuts that can be made? Will there be any layoffs associated? What does that integration look like going forward?
Yeah. So the acquisition was announced the end of January. The integration has been very successful. 3 important milestones I will tell you. We are returning Micro Focus to organic growth in this fiscal year. We also committed to get Micro Focus renewal rates into the high 80s, and we are targeted to achieve that at the end of the fiscal year. And more importantly, we drive software growth with profits and cash flows, and we are looking to bring Micro Focus to what we call our target operating model of 36 to 38% by the end of this fiscal year as well. As far as restructuring of the workforce, that's behind us. We did do that about a year ago. And as far as synergies go, we are well integrated. The synergies are really coming from great products we have from Micro Focus into our pillars. There is a lot of customer synergies. And to your earlier point in growth, that's really where we expect to drive the synergies from, more related to growth. And we will be on the other side of the cost as well. As I said, getting Micro Focus to 36 to 38% in the first full year after completing a large transaction, that's very commendable.
Okay. And one of the big things that stands out is that your earnings that you're making right now, even on a GAAP basis, are positive. A lot of folks in your category don't have that metric to boast. And it seems like you surprised the market to the degree that you are right now based on how the stock's been responding from the earnings. What about the cash flow and the capital needed to keep investing and do what you need to do integrating the companies? Do you have all that money that you need? Do you need to tap capital markets at all?
Yeah, so capital is a great question. So we do have a de-lever program given the debt we raised for Micro Focus, and we paid about $560 million of debt repayments we've made. And from an availability of envelope for the R&D and the go-to-market, we're targeting to be 38 to 40% in fiscal 26. And the journey to that is doing 36 to 38% adjusted EBITDA margin here. And the journey to 38 to 40% is going to leave us with $1.5 billion in free cash flows in fiscal 26. So delever is a top priority, investing back into the business, as I said, as high as 16% of our revenues towards R&D spend. And we have plenty of value areas to unlock in terms of growth. and particularly in terms of cloud growth, that's very important to us, SaaS and AI growth, and given our profit profile, our profitability profile, we are well positioned to do so.
Okay. Love all the details on the fundamentals. I kind of have one general tech question for you before I let you go, Madhu, which is I'm looking at late last month, I guess you guys do like a ranking of like the biggest ransomware threats and the nastiest malware of 2023. And I was just kind of lately have been puzzled by there's all these cybersecurity companies and businesses, yet there continue to be these massive hacks from like hotels. All Clorox gets hacked. I mean, is someone not doing their job? Is there a market there to offer a software that's better? I mean, how does that market look to you in terms of being able to push into cybersecurity? It seems like it's underserved still, is my point.
Yes, absolutely. I couldn't agree more. Cybersecurity is a very important pillar for us. As you rightly pointed out, as companies continue to innovate, the hackers continue to innovate the hacking capabilities as well. So for OpenText, cybersecurity is a very meaningful pillar. We do have our own data security and threat detection and malware detection tools, and it's a very important market for us. I will say that organizations have to really build their foundation very strong from a cybersecurity perspective, and there is still investments and innovations to do there, and we believe OpenText will be a key player in it.
All right. Thanks for the introduction, and we'll definitely be keeping closer eyes going forward. Appreciate it.
And thanks for your time, and thanks for having us.
Likewise. Thank you. Madhu Ranganathan is the CFO at OpenText. OTEX is the ticker. 7 a nice move post earnings.